Have you heard the saying, knowledge is power? But when it comes to investing, it's not just knowledge. It is the right knowledge. Financial news is packed with information. It can either make or break your next investment. So how do you shift through all the headlines? And how to find what really matters? In today's video, I'm going to show you something important. How to evaluate a company's performance from financial news. And how to understand the market news. This can help you take smart investment decisions. Stick with me to learn how to turn a news into profit. So, why is financial news so crucial? It is simple. It tells you how a company is doing, whether they're profitable or growing or in trouble. For example, news about earnings reports or mergers are important. Market news gives you a behind-the-scenes look at the health of a company. But here is the catch. Not every headline is equally important. Knowing what to focus on can help you understand whether a company is worth your money. Let's look at following key components inside any news you should be paying attention to. The first thing to check in any financial news is company's revenue and profit. Revenue is the total income a company makes from its operations, while profit is what's left after expenses. You'll often see this in quarterly or annual earning reports. Growing revenue is generally a good sign, but it is not enough on its own. Look for companies that also have growing profits. A company might be bringing in a lot of money, but if they aren't profitable, that is a red flag. Next, look at earnings per share or EPS. This tells you how much profit the company is making for each share of stock. If EPS is growing, it usually means the company is becoming more profitable, which can be a good signal for investors. Be sure to compare the EPS to previous periods. This gives you an idea of the company's growth trajectory. Debt is another critical metric to watch. Just like in personal finance, too much debt can be risky for a company. Financial news will often report on a company's debt levels. Look for mentions of debt-to-equity ratio or total liabilities. A company with a manageable amount of debt can still be a good investment. But if debt levels are skyrocketing, it could signal trouble. This happens especially in tough economic times. So following the news is crucial. Cash flow tells you how much money is actually moving in and out of the company. Cash flow is often overlooked, but it is one of the most important indicators of financial health. Positive cash flow means the company is generating enough cash to pay its bills. It means the company is investing in its future. If a company consistently has negative cash flow, it might be struggling to stay afloat. Even if the revenue looks strong for the company, if the cash flow is negative, it is a red flag. Financial reports are only one part of the story. Market news can also provide crucial insights that can affect a company's future performance. Let's look at 3 types of news that can impact a company's stock price. First, management changes. A company's leadership team plays a huge role in its success or failure. When you see news about a CEO stepping down or new executives coming on board, it can have a big impact. Positive changes in leadership, like hiring a well-respected CEO, can boost investor confidence. But unexpected resignations or turmoil at the top can cause uncertainty. This can lead to stock price drops. Next, mergers and acquisitions. These can be game changers for a company's future growth. A well-executed acquisition can open new markets and create synergies. This can boost profitability. But not all mergers are created equal. Sometimes they come with risks, like taking on too much debt or facing regulatory hurdles. Keep an eye on how the market reacts to these announcements. Look for clues in the financial details about whether the deal is likely to be a success or a failure. Finally, look at industry trends. If you are reading news about a company, zoom out and consider how the industry is performing overall. Is the sector growing? Are there new technologies? Or any regulations that could change the game? For example, if you are evaluating a tech company and the whole industry is booming, that's a positive sign. But if the industry is facing challenges, even strong companies can struggle. Now that you know what to look for, let's see how can you use this information to make smart investment decisions. Here's a step-by-step approach. First, don't evaluate a company in a vacuum. Compare it to its competitors. Is it performing better or worse than other companies in the same industry? Financial news will often provide comparison metrics. For example, market share or growth rates. Use these to see how the company stands along with its competitors. Next, look for consistency. A single quarter of good results doesn't necessarily mean a company is a strong investment. Look for companies that have a good track record. Look for steady growth in revenue, in profit, and in EPS over multiple periods. Consistent performance is a much better indicator for long-term success. Lastly, don't just focus on what has happened. Pay attention to what is coming. Companies often provide guidance or forecasts in their earnings reports. If a company is expecting growth, that's a good sign. But if they're lowering expectations, it could mean a trouble ahead. Pay attention to any forward-looking information, as it can give you a heads up on whether the company's stock is likely to rise or fall. Evaluating a company's performance from financial news doesn't have to be complicated. By focusing on key metrics like revenue, profit, EPS, and cash flow, the journey becomes easy. Also, by keeping an eye on market news, like leadership changes and industry trends, you can make smarter and more informed investment decisions. If you found this video helpful, be sure to subscribe for more insights on how to analyze financial news. And hit the notification bell to stay updated on future uploads. Drop a comment if you have questions or topics you want me to cover next. Thanks for watching and happy investing.